The famous value investor Benjamin Graham once said, investing isn't about beating others at the game, but it's about controlling yourself at your own game. A very warm welcome to our keynote speaker, Mr. Hari Prasad, the esteemed panelists, faculty members, fellow Christites, and the audience who has joined us from far and wide. I'm Sanveer Singh, representing University Student Council, and it's my privilege to be the moderator for the session. Daksh is an educational and career guidance fair organized by the Student Council of Christ, deemed to be university. It focuses on the various opportunities made to pre-university, undergraduate, and postgraduate students. The platform enables students to acquire knowledge and make informed choices regarding their higher education and careers. Career Dialogues is a distinctive feature of Daksh, wherein eminent and established figures from diversified fields are invited to their invaluable experiences, accompanied with their expert opinion about future prospects lying and for the students wishing to pursue a career in these fields. It gives me immense pleasure to introduce our speaker for the session, Mr. Hari Prasad, who will be gracing this occasion with his insights on career opportunities in Indian stock markets. After completing BTech in Vellore University, Hari Prasad found curiosity in stock markets from working in futures first and then hedge equities to his own startup. He undertook many initiatives to make Indian stock markets more accessible and affordable for everybody. He partnered with Dalal Street's one of the best brokers, Motilal Oswal, for wealth management and portfolio services. His areas of expertise include financial risk management, algorithmic services, and financial advisory services. With almost 5 years of experience in his field, Mr. Hari Prasad is the CEO of Livelong Technologies, who are changing how we see financial markets. Sir, we are very excited to hear from you. Before I hand it over to you, sir, I'd like to point out for the benefit of the audience that any questions for the speaker can be posted in the comment section of the YouTube live stream, which will be held after the presentation. Kindly note that a feedback form will be shared in the YouTube comment section for all the participants, including Christites, for attendance. So without further ado, I humbly request you, sir, to begin your talk. Over to you, sir.
So thank you, Sarvin. So thank you for this wonderful introduction. And may I just go ahead and share my screen?
Certainly.
So when we speak about stock market, the first thing that could be kind of coming to your mind or be kind of coming to almost any person's mind is what you would have heard about the markets from someone in your family or someone who would have lost a lot of money in the markets. Okay. And there is nothing to do about it actually because of the fact that 99% of the people in the markets lose money. And there is this common saying that stock markets or trading is purely betting. Okay. Or trading is a place where people actually bet. Now, let me just mention to you, even though 99% of the people lose money in the markets, you still would be knowing that there's a lot of curiosity or a lot of attraction towards the market just because of the reason people who have succeeded in the markets have actually made it really big. And that itself is that particular attraction point that is driving more and more people in the markets. However, or quite unfortunately, 99% fail. And the simple and the only reason for that is one is greed and the other one is lack of knowledge. They're purely gambling. They're purely gambling or betting in the markets. So if someone who has mentioned to you that market is all about gambling or betting, that person probably has gambled or done a betting in the markets. But market is a place where you actually analyze, where you study, where you kind of understand the possible outcomes of the stock. You define your risk, what potential reward you can check out for, and based upon the very same, if you take actions, then this is a scientific approach to trading or investing and nothing at all related to gambling. So this is all about making use of probability as well as statistics so that we have a winning edge in the markets. Now, with that, Please don't think the institutions out there. So many big banks, many big hedge fund firms, they are gamblers. So they are not a set of gamblers who go to the office and gamble. Rather, it is a place where we analyze data, we make use of probabilities, and then we decide whether to do something or not. When we are deciding whether to do something, we need to know what is the reward. And as you know that this particular wonderful webinar that is conducted by Christ University, like the agenda of today's webinar is to know about the career opportunities, right? Means you need to understand, once again, you need to understand what is the risk and reward associated with this field. So I'm here to speak about risk reward in simple words. First of all, let me just quickly outline to you what are the career opportunities in the markets. That is, if you are someone who's going or looking into get into a full-time career in the markets, what are the potential opportunities you have? Now, many of you would have heard about trading or trading. So trading by yourself, intraday trading, positional trading, swing trading, etc., etc. I'm not getting into the classification. Trading means you're buying and selling stocks, and you're buying something at a lower price, and you're looking forward to sell it at a higher price. I assume that you're already familiar what a stock market is. It is nothing else but a common meeting place of both buyers as well as sellers. That is, people who are looking forward to purchase shares and people who are looking forward to sell shares meet at this common place called as the stock market. So it is a platform for buyers and sellers to meet. So you as a trader, your interest is going to be nothing else, but you look out for opportunities based on your own studies where you can buy stocks at a price whose price you actually expect to pick up. So if you have an expectation, okay, I'm having an expectation the price of share A is going to move up. I buy share A and I sell share A at a higher price. And whatever is the difference between the selling price as well as the buying price is going to be my profit. Now, there is another phenomenon called short selling where you sell something first, then you buy it back at a lower price. I'm not getting more into that. Why? Because it takes some time to explain. So both you can make money in the markets by trading if the price is falling down as well as the price is picking up. So that is what you mean by trading. Now, you as an individual with just access to internet and a trading account or a demat account can get started with trading. So blindly don't get started with trading. Understand how the markets work. So just try to see the markets for at least a duration of 2 to 3 months. Then you do your first trade. Don't randomly do a trade. Then you probably must have heard about stock broker. So I'm just giving you a quick outline about all the career opportunities first. So stockbroker. So that means you must have watched, almost many of you must have watched Wolf of Wall Street. Some of you would have watched Harshad Mehta. Many movies you must have watched, and you would have seen people picking up a call. They're kind of asking, shall I buy this? Shall I sell this? So that is what a stockbroker majorly does. So he is the one who fulfills the transactions on behalf of his clients. So he kind of actually places order on behalf of his clients with their permission. Right now, it is very uncommon to see people actually taking up the call and making orders, like taking permissions from clients to punch orders. Rather, everything is done online these days. That is, you build an online platform and your participants or your clients, they perform buy and sell orders on the very same platform. So that is what you call as stock broking business. For that, you should be having a company, you should be having some good deposits with SEBI. I'm not getting much into the details. And your profit or your income is going to be nothing else but brokerage. Brokerage meaning, so you charge your clients some money for fulfilling these transactions on their behalf. And that is what we call or refer to as the brokerage amount. So this is another career opportunity. That is, you can work with a stock broking firm. There are n number of stock broking firms in our country, namely Motilal Oswal, Zerodha, Upstocks, Fires, Geojit. There are n number of broking companies, and you work as a stockbroker for the company where you guide your clients with the trades. That is, you intimate with them with the opportunities. You give them some sort of advice, and they actually ask you to punch the trades on your behalf. Then what do you mean by an investment advisor? That could be a question. So if you are the one who's giving the recommendation, then what does an investment advisor do? So let me just tell you, usually what stockbroker does is, a stockbroker, his revenue is nothing else but the brokerage. So if you make money or if you make loss, till the broker makes money. Whatever happens, your broker is going to make money, because whatever transactions you do, at the end of the day, broker is always going to make money. So on the other hand side, there is another career role called as an investment advisor. So he or she is a person who is going to advise you with some potential opportunities that they find in the markets, and you could actually follow that. However, it is highly recommended that you see the track record of the investment advisor before you get started with following anyone. You need to see regarding the advices that he has given earlier, how it has performed. And most importantly, you have to see how or whether this particular investment advisor is following all these things for himself, or is he one random person who is just giving some advices in the air. Okay, that is what we call as investment advisory. And majority of the times what happens is, the advisor is going to charge you a subscription fee for the services that he is going to provide you. Now, there could be cases where you can even charge your client. If you're an investment advisor, there are cases where you also charge your clients on a profit sharing basis. So there is a lot of regulations for that. I'm not getting into the deep of that. However, this is another side. Now, if someone is just attending this webinar and you're completely new to the market, you would be wondering, okay, almost all the things that I have mentioned over here are kind of interrelated. Exactly. So this complete ecosystem can be interrelated. Okay, I'll just come to that towards the end as well. Then comes, then comes the portfolio management services. So for portfolio management services means, if you want to do it legally, if you're planning to run a business, or if you want to set up an institution that is doing portfolio management services, first of all, you should be registered with SEBI. Okay, Securities Exchange Board of India. You should be registered with them. If you want to start a PMS, there is a lot of criteria for that. After that, you can start accepting investments from the clients, and the minimum investment amount as of now that is recommended by SEBI guidelines is 50 lakhs. You can collect this money from the clients, and you can do the investments on the client's behalf. On behalf of the client, you can actually invest in the markets. You have full power. You have full or complete control over the client's money. It's your discretion where to invest, when to withdraw, when to sell, when to buy, etc., etc. Which company, complete 100% discretion is yours. However, when it kind of comes to, if you're an investment advisor or if you're a stockbroker, you can just give, okay, this as an investment advisor, you can give an advice. Client's decision whether or whether not to do. As a stockbroker, also, you can actually call up the client and mention, okay, this is what I feel. Are you interested in doing this? And it's completely the client's discretion to decide whether or whether not. But as a PMS service provider, it is your discretion. And when it kind of comes to PMS service, whether you're working at a PMS or you're starting your own PMS, a very good trend that we see these days is, most of the people, once they have sufficient experience in the markets for themselves, they kind of start up with their own PMS services. Okay. And you can either work for a PMS service provider. So for that purpose, you need sufficient experience in the markets, doing research, dealing with clients, etc. Plus, you should definitely have some sort of a track record for yourself too, for picking stocks. So don't think randomly you can become or start up a PMS service. It needs definitely needs some experience in the markets and some time where you get comfortable in how the markets work and analyzing stock, researching about it. And majorly, the people who do that research activities is whom we refer to as a research analyst. So I'm personally a research analyst. So what we actually do is, we pick out stocks, we do research on it, we try to figure out probable target points, probable stop loss. Stop loss means like where you should be understanding that you should exit out from the position. Okay, how much you are expecting the price to move, where you should think about entry. You study about the company, you kind of do a bit of analysis about the market conditions. Then you decide, okay, whether this is going to be favorable or not. You do a bit of research on the company, and the research that we do, we can actually pass on to our clients also. Okay, so that is what a research analyst does. And there could be a number of people who is working for a PMS company, and the PMS company's revenue is going to be, the common ways they charge 2% of the amount that you're parking with them. So whatever amount you're parking with the company, they charge 2%. On top of that, let's say that the PMS company is generating you 10% returns this particular year. So whatever returns the company generates for you, about 10%, your company can keep 20% of that. So that is the usual profit sharing with almost the all PMS companies. So this could be something that can be kept as a long-term goal, and this is also my long-term goal also, to start our own PMS 5 years down the line. And the good thing about this is you get a lot of access to a bigger fund pool, and where you can check out for a lesser return, but since it is being done on a bigger capital, it makes good sense. Okay, now is there even a single person who hasn't heard this, seen this mutual fund ad saying mutual fund sahi hai? Okay, so there comes the role of mutual fund advisors or distributors. So they are the ones who are involved in distributing the different mutual funds, and they get paid for distributing the various things. In the sense, like, if I sell a mutual fund to you, and I will be getting something called as a commission for that. And this is already familiar to you, insurance distribution or advisory. So I will not explain much about it. So broadly speaking, in the stock market, like financial markets domain, especially in India. So whatever I'm mentioning over here is with a perspective of the Indian market scenario at this point of time, 2021. Okay, so at this present point of time, so these are the major career opportunities that one has in the Indian stock markets. And the reason I have mentioned self stock trading to be on the top is because of the reason that any person, any single person with a will to learn, a person who is very much dedicated, can do this. Okay, and to be like, to explain in a much simpler manner. So, what are the benefits of this? So, any person can trade for themselves, right? You need not get anybody's permission. Only thing is, you need to be at least 18 years old. You have the right knowledge. You can trade stocks in the stock markets for yourself. Okay, you can trade by yourself. You can trade for yourself in simple words. First of all, the major reason, now we have a tendency that we see people from the IT jobs, etc., quitting their full-time job, getting into stock market trading. The reason for the same is it gives you a lot of time freedom. Time freedom in the sense, see, our market timing is 9:15 a.m. to 3:30 p.m. trading hours. Now we have something called as commodities markets, which is open till late night, 11:30 p.m. So some people, if they're comfortable in the morning hours, they trade the equities market, which closes at 3:30 p.m. All Saturdays, Sundays are holidays. And now, if you wish, you have, let's say that you have a weekly target. Your weekly target is being met. Now, if you want, you can actually take make maybe a 2 or 3 day off once your weekly target is met. Now your monthly target is met. Maybe you can take a month off. So there is kind of no hard and fast rules of how much time you should be spending for the markets, nothing like that. So you are your own boss. Okay. And you can plan and build a career at your own pace. So there are people who feel, okay, I should be having a very slow and steady progress, which is always suggested. Why? Because your risk could be very less. Now, there could be people who would be like, okay, I need a bit more aggressive career growth. So you can do that way as well. However, higher the risk would be there when you kind of be a bit more aggressive. So you yourself can define for yourself what should be the amount of efforts you should be putting in the markets, the amount of the time you should be spending in the markets. Okay, your weekly target, monthly target, everything you yourself are fixing, no, not your boss. In simple words, you're becoming your own boss if you're trading for yourself. Now, if you're working for a company, definitely there'll be some monthly targets, etc., etc. Now, if you kind of ask me, like, what is the regulation that, when you are working for a company, how do you get started with it? What could be the prerequisite for it? Okay. In simple words, there is nothing as such a prerequisite to work in this field or to make up a career in this domain. Why? Because we see that majority of the people in the stock market these days, they are from the engineering background. One probable reason could be there's a lot of supply of engineers, and there's not that much opportunities in the core engineering domain. However, so talking about market, since we are doing it for ourselves, there is no restrictions. There is kind of no restrictions as such that okay, only these many people can get a job, or they want. There is no joblessness. It's a pretty open place. Anyone can participate, and if you're skilled enough, you can make it really big. Okay. Then if you ask me, like, well, to get into a company, which could be the qualifications that would be necessary. So first and foremost, I would just like to mention about NISM. So there is something called as the National Institute of Stock Markets, and which provides a variety of certificates. So to get into a company that is dealing in stock markets, so SEBI has made it mandatory for people who are into distribution, punching orders, etc., in the broking field especially. You have the NISM certifications. So that is one part. Now, when it kind of comes to the wealth management side and all, hardly there is not any compulsory certificates that is needed. However, if you have some sort of an MBA in finance, or if you have a CFA, or maybe if you have something called as a CW, CW you must not have heard, Chartered Wealth Management, something like that, you get a extra advantage. That's it. But there is no compulsion that you need to have these degrees as well, because markets are all about more about practice, more about the exposure that we have in the stock markets, and nothing related to your qualifications or someone who has read a textbook regarding the markets needn't necessarily be someone who's going to do good in the markets. So a lot is kind of totally dependent a lot on your emotions, your discipline, how you are capable of managing your risk, how or how you are making use of your emotional quotient, etc., that is going to help you succeed in the markets. And honestly speaking, nothing much to do with your qualifications or your degrees or whatever it may be. So majority of the companies, including Goldman Sachs. Okay, so when we kind of talk about the financial domain, so one of the first companies that would be coming to your mind would be Goldman Sachs. I don't know if you know. So Goldman Sachs, when they kind of actually hire, they hire people from all the domains. Okay, in the sense they would be hiring engineers, they would be hiring musicians, they would be hiring artists, they would be hiring people from the law field, they would be hiring people from the commerce, they would be hiring people from the engineering, from all variety of domains. These companies hire. Why? Because they kind of actually get a pool of skills who have the qualities that they're looking for. And the qualities that they majorly look for are, one is majorly your emotional quotient, okay, your practical or logical thinking capacity, and third thing is like your obviously your communication skills, your interpersonal interaction skills. All these things matter, and how much determined and dedicated you are in achieving your goals. And majority of the times people, okay, so this is something that I have understood from interacting with a lot of people who have cracked the exams, as well as like interviews, as well as people who have failed. Majority of the times people find it difficult. So somebody would be really good with his practical capabilities as well as his problem solving capabilities, all these things. However, the person kind of fails at performing good at a time of stress, or at a time of extreme difficulty, he would fail. For the very same purposes, these companies have something that we refer to as stress interviews. So stress interviews means, first of all, they'll start stressing you out. And so at this particular point of time, people will, so they'll check how you are capable to perform under stress or under pressure. How can you perform? So they would be asking you maybe even some simple multiplication questions or simple division questions. However, if you can't answer those simple questions when you're being stressed, they'll realize for themselves that you are not someone who is going to withstand the pressure that is going to be involved in the financial markets. So maintaining a good emotional quotient and staying focused and disciplined is very, very important as far as someone who is looking forward a career in the stock markets is concerned. Then then one more thing is there. I just wanted to mention that if you're thinking about getting into the financial domain, never ever think about getting into it just for the money. Okay. Why? Because if you are not very much keen about the markets, if you're kind of not very much keen about how the markets work, if you're not ready to update yourself on a daily basis regarding the markets, this is not going to be the field for you. Maybe in 1 or 2 years, you will actually find your career to be really boring. And it could be a bit difficult for someone who has got into a financial field to divert to some other core industry at a later point of time. So this is one disadvantage that I have personally felt. Why? Because so someone who is getting into this field, usually completely fresh, he would not have got any kind of an exposure. Let's say that I'm a mechanical engineer, I got into this field. So in my starting years of career, if I have not got any kind of an exposure in the core industry that I have studied about, it would actually be a bit difficult for me to go for a career switch. Okay. So someone who's getting into the markets, just realize for yourself whether or not the field is exciting you that much, and you are taking this action not based on the money, but based upon your interest towards this field. So if yes, yeah, you can go ahead. Why? Because if you are ready to put in the efforts, definitely you will be able to get results. No questions on that. However, if it is just that, okay, thinking about a short-term gain in money is what has attracted you to this field, this is not at all the place for you. Why? Because you had to work under pressure, and there could be times when you had to work on Saturday, Sunday. So I personally work on all Saturday, Sundays. Okay. So there could be no Saturday, Sundays or no fixed timing for you. Why? Because this is all about money, managing the money. And at any point of time, you would definitely need to be alert in deciding what to do, what not to do for your clients as well as on your own capital. So kindly keep that in your mind as well. Then talking about the opportunities in this field, so even when we see a lot of saturation in the other industries, for example, I'm not mentioning any particular industry, but we see that you must be aware of the joblessness. You must be aware of the mishaps or firings that is happening in almost every other industry. I just wanted to mention to you that even during this time of lockdown, if you ask me, which is that one particular institution that didn't even shut down for a single day, it was nothing else but the stock exchanges. So that important the stock exchanges are for the economy. Okay. The sense not there was not even a single day when the markets were closed. Markets were open throughout. So throughout the lockdown, our markets were continuously open. Not even a single day it was actually shut. So that itself tells us how important the stock markets are for the economy. Then talking about the opportunities in this field, let me just tell you or mention to you that lesser than 3% to 4% of the population in India invest in the stock markets. When it kind of comes to countries like the US or the other developed nations, it's around 40 to 60%. 40 to 60% of the people, they are investing in the markets. However, in a big country like India, so which is a developing country, right now is just lesser than 3 to 4% of the people who are participating in the markets. And with this very less population of people who are participating in the markets itself, the potential or the like what do you say, the kind of total revenue that the businesses related to the markets as well as the trading turnover. The kind of, you must be knowing that our options market are the most matured markets. Our index options markets are the most matured in the world. So the kind of potential we have with just 3% of our population trading in India itself, trading and investing in India itself is too huge. Now kind of think about a time when more number of people participate in the markets, and definitely it is going to happen, considering the fact our interest rates, our bank interest rates are decreasing year on year. And as a country becomes developed, from a developing point of view, once a country becomes developed, obviously the interest rates has to decrease. So along with that, the participation in the stock markets is also definitely going to boom. And even if a 3% more gets added on into the markets over the next 5 years, the employment opportunity that is going to be there, or the potential for you to gain out of it, is going to be pretty much huge. Because the market share, even if you get a very less market share in this, because India is a very huge country with a very wide population, in any of the fields, if you get a very small market share itself, it is going to be a huge opportunity. So it could be in any of the sectors that I would have mentioned, starting from stockbroking to advising to even what do you say, distributing mutual funds or insurance. The potential is pretty huge. As far as someone who is going to get started with trading or investing for himself or herself is concerned, our country India is just a developing country, and we are yet to come out with our fullest potential. We are still developing, right? So as far as that is concerned, in the long run, the companies present in India has a lot more better to do, has a lot more better to grow. So with that, if we are also participating in the markets, definitely it is going to give us some advantage in terms of appreciation of the investments that we have made for the long run. I'm not asking you to look at today's market or tomorrow's market, but for the long run, India is definitely on a bull run. Now, uh, now the most important part now, I guess. So there has been many questions regarding to like how do we, or how does one kind of stay focused in the markets, or what are the things that we should be looking into before getting into investing or trading the markets. I'll just give you a simple overview. I'm not getting much into the details. Why? Because we have a lot of limited time limitation. So first and foremost, you should have for yourself a trading plan or an investing plan or a methodology based on which you are going to invest. Okay, so you should be having a long-term goal. So you should have a purpose where you are investing in the markets. That is also very important. So please or never ever do recommend a trading or investing based on somebody else's telling. So this is how many of us lose money in the markets. So your uncle or your uncle's friend or uncle's friend's friend would have made some money in a particular stock. Now what you do is you also start investing in that uncle's friend's company that he invested. So now what happens? Maybe your uncle's friend's friend made money, but you're going to lose money. Then you will blame your uncle's friend's friend. You'll tell, okay, that guy told me, that is why I lost money. Then somebody else will do the same thing, you do it again, and you end up losing money. So do your own analysis before doing any particular trade or investment. And blaming anyone or blaming the markets for the losses that you make is going to be very easy. Anybody can do that. But trading or investing successfully is more about discipline and patience. So rather than any particular strategy or methodology, so more weightage should be given for your emotional quotient as well as discipline, and sticking with your plans so that you are able to get the best out of it. Okay. So always have some rules that you're going to follow when you're doing this, and consider this to be purely as a business. So many people, what they do is they think that, okay, this is somewhere I can make money very fast. Okay, I'll get into this field and I'll make a lot of money in 1 month or 2 months, because that could be the way it has been projected in some movies or something. But it doesn't work like that. So think about this just like any other profession where you had to put in a lot of efforts, and you will get the fruit maybe 2 years down the line, or maybe 6 months down the line. And for some of you, it could be maybe 3 months down the line. I'm not telling you any hard and fast numbers, but the more efforts you put in, the more probability or definitely you're going to get the fruit. but it's going to be a slow and steady manner. So just like any other profession, so you need to study, you need to understand how it works before expecting the fruits. And uh, last and final, many of you would be wondering what could be the reward or what could be the potential that I could look into from the markets as a fresher. So I would like to mention the present market scenario for someone who is getting into a career in the markets as an employee, who is working or getting started as an employee, what he or she could expect. So to start with, someone who's getting into a career in any of the fields that I have mentioned, starting from a stock broker to a mutual fund distributor, or someone who is kind of dealing with insurance products, or someone who is into the research analyst domain, anyone who's getting into the career could check out or expect something like a 3 lakh, 2 to 3 lakh rupees on average on a yearly basis to begin with. So often what people think is, okay, when I get into the stock markets itself, first year I can buy my Lamborghini or Rolls Royce. It doesn't happen. So what usually happens is, yeah, your beginning salary is going to be low, and always give importance to the exposure or the experience that you're going to gain from your first job, okay, in the markets. So that is actually what is going to pave the way ahead for you. So once you start getting the right exposure, and let's say that you have some sort of an experience in the markets, so right now the salaries I have mentioned to you is based upon the job markets in India. So I'm not comparing it with any foreign institution. So if you Google or something, you must be seeing some 50 lakhs, 1 crore uh, as the salary. So with the job markets in India at this point of time, so with someone who is having something like a 2 to 3 years experience, he can actually expect something like a 5 to 7 lakhs uh, annually. But once you have enough of an exposure for yourself and an experience for yourself, where you have given some proven results to your clients, then obviously rather than practicing for someone else or working for someone else, it will always be more fruitful if you do it for yourself. If you start consulting by yourself for your set of clients, and you really don't have any upper limits for that. Now, to be pretty honest, there could be a good amount that you could generate as brokerage, and as well as the advisory services that you're going to provide. Depends on the audience you're capable of capturing as well as serving. Obviously, you have to provide with them with the best services so that they stick with you. Now, if you're trading for yourself, once again, there is no upper limit for your income potential. So your income is going to be purely dependent on the kind of risk that you're going to take in any associated position. Okay. So always take comfortable risk. So there is nothing like you can earn only this much in a day, or you can earn this much only this much in a day. So your earnings would purely be dependent on your capital. Your earnings would be actually be dependent on the quality of the trades you take. And gradually over time you could easily scale, and there is no upper limit potential. So nobody will be like, well, I'll give you only this much profit. So market is a very open place. It rewards the person who is willing to take efforts, and there is no upper limit on how much you can gain. But the struggles needed in order to succeed in the markets is very huge. I'm not telling it is easy. It is definitely very huge. You had to struggle a lot, and there'll be even times when you lose your capital also. So before you get into the market, study it properly, start very small, then you think about scaling once you are comfortable in what you're doing. So don't think first day itself you will become successful. It'll take you some period of time. Time will depend on person to person. But if you put in effort, definitely you'll be able to succeed. So these are the things I just wanted to convey. So talking about the career opportunities. So in our markets, as far as our markets are concerned, these are the things. Now, when it kind of comes to the overseas markets, that is the international markets, so you must have heard about hedge funds. You must have heard a lot about algorithmic trading firms, automating strategies, etc., etc. In our markets, it is still a developing thing. So I haven't mentioned much about it. So right now, whatever opportunities we have is majorly in the conventional sectors itself. Majority of the opportunities. So talking about the other fields like algorithmic trading. So we are also into algorithmic trading, but the opportunities are lesser. It is still emerging. So we couldn't say that there is a big job market for that at this point of time, but definitely maybe over the next 5 years we could see. So thank you, Sanveer. So this is what I just wanted to convey. So I guess we could go ahead with the questions for now.
Thank you, sir, for your eloquent talk. I'm sure that students and audience would have earned an extensive amount of knowledge from your presentation. We would now like to proceed to the Q&A session. As mentioned earlier, requesting the audience to type in their questions in the comment section of the YouTube live stream. I will be reading out the questions for you. And also, before proceeding, I'd like to announce that feedback form will be shared with all the participants after this meet, which will be used for attendance. Because we are flooded with so many questions, sir.
Okay.
Our first question is, how do we identify an investable stock through analyzing figures, financial statements, etc., to form a long-term opinion?
Okay. So see, there are many approaches for that, and what we generally describe the way we study the balance sheet, etc., study about the company's management, company's business model, company's P&L statement, company's ratios, etc., is what we refer to as fundamental analysis. Okay. So 20 minutes time or 10 minutes time wouldn't be enough to describe what fundamental analysis is, but I'll give you an overview. So it'll actually take, so as far as a company is concerned, it takes almost 2 to 3 months to do a proper fundamental analysis of a company. Okay, it takes us almost 2 to 3 months to do the proper FA. We call it as FA. Okay. Now, what we actually majorly look into is we study the business model of the company. I'll just guide you some steps. Maybe you could write it down. So there is the site called screener.in, screener, okay, screener.in. So if you get into the company, you will be able to see regarding the ratios or the balance sheet or the expenses, liabilities, debts, etc., of different companies. So we kind of have a look at the ratios. We try to predict. So many models are there. So there are, so one model that we personally follow is like we have a look at the PE ratios, and we kind of actually try to project what probably could be the expected target price of the stock. Okay, so that is one way that can be done. Like I can't explain it right now in 20 or 30. Even if I have 2 to 3 hours, still I can't explain. So very lengthy process. Now, we also have a look at the competitors of the company, the business model the company is into. So what all are the business? So what are the businesses the company is into? We give importance to the management. How trusty is the management? Can I rely on the management? Then what is the educational qualification of the management? Okay. So then we kind of have a look at the competitors of the company. So we see, okay, if the competitor of the company is kind of emerging at a faster rate than the company itself, then why do we have to invest in this company? We should be investing in the competitor, right? So is the kind of company a market leader? All these things we have to look into. Just think 10 years down the line, what would be the demand for the products of the company? For example, if I ask you, like, electric vehicles is an emerging sector. So 10 years down the line, you know that if electric vehicles are going to come into the market, obviously the companies dealing in electric vehicles or providing equipments for electric vehicles or supplies for electric vehicles like electric batteries, etc., they have a potential. You find a potential in that. So think 10 years down the line, what could be expected out of these companies? So all these things we have a look at. Then obviously the relation with the government. So what is the relation the company has with the government? So that is also a factor. So if the opposition party is coming in, how would the business relation and the government business relation be affected if the opposition party is coming? So everything you should think about. Think about the innovative products the company is going to launch in the market. What could be the potential outcome? Think about what the competitor products companies are launching. Competitor companies, what all products they are launching, will that affect the business of the company that you're investing? So it's a lot about common sense also. So in fact, we have something called as common sense investing on our YouTube channel. So you could have a look at that also. Common sense, like just have a look around you, try to figure out what would potentially happen if uh, the scenarios happen. For example, Corona. So it has actually paved a good appreciation for the pharmaceutical companies in India, which was actually underlooked over the last 3 years, right? So there could be many socio-economic factors also factoring in your decisions. So because of Corona, like the medical companies, they kind of had a good appreciation. Now, let's say that India is getting. Let's kind of talk about our currency is going to weaken over the next 3 years. Our currency is weakening year by year. Then definitely the IT companies will get a benefit. Why? Because IT companies in India, majority of their projects are from overseas, right? So they'll be earning in US dollar. So if our currency is weakening, their income or profit margin will definitely increase. So all these things we'll be having to have a look at. And so many combinations of conditions or scenarios we should be able to think about. So based on that, we do fundamental analysis. But at a personal point of view, that is like if you kind of tell me, can I do FA by myself? Honest answer is you can do, but up to what extent, that is a question. So the best opportunity would be there could be n number of research reports that is available. So have a look at the research reports. Maybe I could guide you with some. Maybe towards the end, I'll kind of share our contact. So we have some research reports, or some research reports that we have generated. So you could have a look at it. So maybe you can have a look at research reports that have been shared or published by other broking houses. So you always use that as a reference, read through it. So if whatever is mentioned in that is actually coinciding, or you feel it convincing along with your own logics, you can invest in it. So that would be the best way.
Thank you, sir. Next question will be, sir, do you think cryptocurrency will be accepted worldwide in coming days? And also explain its legality in India.
Okay, so that's a very tough question. So I'm someone who sold zero point 0.3 BTC at $10K. Okay, so I really don't know. So no comments on this. Why? But see, cryptocurrency, definitely there is a future for blockchain based currency. Now, which currency, I can't make any comment, but right now Bitcoin is the one that is in hype. Now, what if after 5 years there is something else that is coming in? Right. What if something else that is coming in? Definitely blockchain would be there, and we are hearing news about our government to kind of come out with our own cryptocurrency. Right. Yes. We're kind of actually hearing about our government kind of going to come out with our own Bitcoin currency. Now, if something like that happens, I really don't think our government would be willing to accept the other cryptos. Okay, now talking about the legalities of cryptocurrency. See, as of my best knowledge, it is not legal. Okay, it is kind of not legal as of my best knowledge, but there are many loopholes in the systems or in the things that are mentioned. But I'm personally not considering it to be something. I'm not personally considering it to be something that we should be betting on heavily. Okay, it's not something that I personally consider to be betting on heavily. Where, okay, so maybe you could think about putting some money in mutual funds or FDs or some government bonds or something like that. But same way, you can't think about keeping that much amount of money as a safe investment in Bitcoin. Maybe some amount of money that you're willing to take a risk. That, let's say that you're feeling that, okay, this much amount of money, I don't even mind, or I won't even cry. Be honest with yourself. I won't even cry if this becomes zero. Okay, I'm investing X rupees. I won't have a trouble. This X is going to become zero. I don't mind. Maybe you can think about taking some positions in crypto. I'm not promoting any crypto over here. It's a lot of issues, but maybe you can do something like that. And as far as the legalities, I would be the worst person to mention to you. So I'm not mentioning anything that I'm not supposed to say. So I'm into the stock markets, not into the cryptocurrency. However, this is my personal thing. If you're willing to take the risk, you can think maybe, rather than investing only in a single crypto, maybe you could think about investing in 3 or 4 of the major cryptos. I'm not mentioning any cryptos names. You guys know which are the 3 major cryptos, right? So I did not mention that here. The person who would have asked that question, definitely you have done a lot of research on cryptos and you have asked this over here.
Certainly, sir.
Thank you.
Thank you, sir. Next question will be, can I start investing by less than 1,000?
Of course, yes. See, there is people actually think that to get started investing, I need a huge amount of money. Getting started is the first thing. Why? Because we humans, we are always procrastinators. That we think, okay, next week I'll invest, the next month I'll invest, the next let next crash come, then I'll invest. We think like that. So today market has dropped down by 3.4 percentage. 3.8 percentage. Today our markets has dropped down by 3.8 percentage. So if you're someone who's thinking about getting started in investing, start tomorrow. Don't wait. Today market is closed, else I would have said today. So start tomorrow itself. You can start with a very small capital. So don't wait for you to become a million or multi-millionaire to get started in the market. Start investing little by little. So getting started is the first thing. So if you get started, you're already way ahead of the rest people who are thinking about getting started. So with this very small investment itself, we can, so 1,000 rupees, I would recommend you to go for, there's something called as Nifty Bees. Okay, Nifty Bees is an exchange traded fund which directly tracks the performance of Nifty 50 index. So Nifty Bees or Bank Bees, you can think about if you're getting started with 1,000 as your first investment in the markets. Then gradually you can think about mutual funds, where you could think about doing some SIPs, something called as SIPs into mutual funds. Okay. Post that, I would recommend you to get into a stock portfolio. Okay, I'm not giving any because diversifying with 1,000 rupees isn't possible in a stock portfolio. But Nifty based, bank based, you can think about. Then you can think about getting into mutual funds.
Thank you, sir. Next question will be, do you treat trading as your primary income or a secondary income?
So my primary income, so at this point of time, so my incomes are kind of majorly well diversified. Okay. So I personally have income from trading. So we are into proprietary trading. Proprietary trading in the sense, so I trade, plus I have a set of traders who are trading with my capital. Okay. Plus we are having an algorithmic trading platform too right now. So where people who would like to kind of automate their trades using a set of non-directional strategies. I'm not getting much into that. Non-directional strategies means we have a set of rules that has been defined. Now every day you can automate your trades with the same set of rules. Somebody who is interested for that, they can subscribe to this. Plus we are into wealth management services, portfolio management services, alternative investment funds, mutual funds, insurance, etc., etc. So these are like that's what I said. Someone who is getting started in this field, and when you kind of actually feel like okay, you can provide more services rather than trading for yourself. Let's say that you have a good strategy, you can automate it. So if you can automate the strategy, people can subscribe to your strategy too for a subscription fee. Everything can be done. So right now, trading is one of my source of income. And since at this point of time, I have more than one source of income, it's not 100% of my income. It is around 25 to 40% of my income.
Thank you, sir. So next question, as college students, how do we start investing?
So that is what I mentioned. The easiest way is, okay, as college students, how do you start investing? Okay, Nifty based, bank based would cost you the money that you're going to pay for a biryani. Okay, so whenever you're thinking about going out for eating or dining, so just think about, what if I invest? Just ask yourself that question. What if you might be buying a biryani, along with that you think about investing? Do both. So every time you go or dine out, think about investing. If you can't do both, don't go for dining. just invest. If you can do both, you do both. Okay, so keep aside small savings, in the sense, as a college students, I'm pretty sure that everybody would be able to keep aside at least 500 rupees per month. Definitely you would be able to do that, right? So just think about keeping, see, start as a college student, you should actually start a mindset of maintaining financial discipline. See, I'm not telling you that as a college student you can be Warren Buffett or what do you say, anyone. But as a college student, you can actually develop that mindset, right? So you can definitely develop that mindset. No questions on that. So see, what does it cost us to develop a mindset where you are going to start investing, or you want to develop a mindset where you actually want to inculcate that habit of investing. Okay, so that is definitely what is going to do you the favor. Okay, so start small, start off by investing very small amount. Okay, just get started. Getting started itself is the first thing, nothing else. So even though a small amount, don't think the amount is small. Just think about the long run. Just think that, okay, every single month of maybe 500 rupees if you're saving per month, and every day you have a monthly allowance of 10,000. So as you start getting, see, it is always easy to continue forward a habit rather than generating or developing a new habit out of nowhere, right? So start practicing these habits from the early stages of life itself, so that as you move forward, if you're investing 5% of your monthly allowance right now, once you start getting a salary, you will definitely be able to invest maybe 15 to 20%. But maybe if you're investing, just if you're not investing now anything, when you get started with your first salary, you probably would be thinking, okay, why should I think about this now? Maybe let me think about doing this after my promotion. Then you'll think, okay, after my marriage. Then you'll think after my kids. Then you'll think, let the children's education complete. Then you'll keep on postponing. But just think about you starting investing right now, maybe to purchase your dream car after 10 years, or to kind of build a house, or to see, thinking about retirement right now is too much. That's not mentioning that. So if I'm kind of conducting this for working employees, I do it mention about retirement. You start planning for your retirement early. So just think about your goal. So thinking about your goal, start right now itself. So even if it is a small amount.
Thank you, sir. So we have our last question. How
Yeah.
can we make profits based on market information in a short period? Do we do intraday or short selling procedures?
See, short selling is intraday only.
Yeah. So the question was, how do we make profits based on market information in a short period?
How do we make short
Profits
selling?
based on market information in short period.
So honestly speaking, trading based on news is actually a myth. Okay, so people actually feel that, okay, if you have this news, then you can make money. So that is what we kind of actually call as insider trading and stuff, and that is illegal. So uh, it is not possible. It's kind of actually not possible to trade purely based on news. So where you are kind of actually going to uh, trade based on some news that someone is telling, and never ever expect uh, the market to actually purely move based on news. So you can't depend on that.
Thank you, sir. Due to time constraints, unfortunately, we will not be able to take up any more questions from the
Sure.
audience, but we definitely appreciate your active participation in the session. Thank you, sir, for answering the queries of the audience. As Alfred Nobel Whitehead once said, and I quote, that no one achieves success, does so without the help of others. The wise and the confident acknowledge this help with gratitude. I would like to express my profound gratitude to everyone who has contributed to make this event a successful one. On behalf of the University Student Council and the management of Christ Deemed to be University, I take this great opportunity to thank our keynote speaker, Mr. Hari Prasad, for taking time out of his busy schedule and gracing us with his presence and enlightening us with his deep-rooted knowledge in the field of finance. I would like to thank the Controller of Examinations and Director of Student Council, Professor Johnny Joseph Sir, who has inspired us and encouraged us. Heartfelt thanks to faculty coordinators of University Student Council for their continuous guidance and motivation. I would like to acknowledge and appreciate the efforts of my fellow university student council members who are part of the event's technical and logistics committee for their consistent support, without which the smooth conduct of the session would not be possible. Last but not the least, I thank all the Christites and all the external participants present here on the YouTube live stream for joining us, for being such wonderful audience. The session has officially